So part of the story of gold this year has it's been this reemergence as a safe haven asset. We haven't seen that theme play out over the last 2 years. What kind of price upside do you think is still left?
Well, I think that we've had a spectacular move for the past 20 days and 60 trading days, and we like to talk about being up almost 2 standard deviations. So it fits in perfectly, Alex, with the Chinese New Year, that we get this surge in the first couple of months of the year, and then we get a correction. So gold could easily correct, but what's different than last year are negative real interest rates.
Meaning that is helpful to gold? Because you could also make the argument that it winds up pushing the dollar higher as other central banks around the world go into negative interest rate territory, which could be negative for gold.
Yes, that's for true, but we're taking a look at what Japan's doing, and what you're seeing world trade is still in a negative territory, and governments are going to have to find something else to stimulate the economy. But right now it seems negative real interest rates is helping gold.
You know, Frank, you brought up China, and I have a chart inside the Bloomberg looking at the gold price versus the Shanghai Composite, and it really tells a fascinating story. The gold price was really on the rise. Chinese consumers were buying more as stocks kind of went nowhere fast. But as more money flowed into the Chinese stock market, it flowed out of gold. How do you see this inverse correlation between the two, and how does that play out?
Well, you know, it's interesting that gold consumption continues to be very robust, physical delivery into China, but also in America. Talking to companies that are selling bullion coins, they had their second best year last year, and gold declined 10%. So there is a strong physical demand for bullion around the world.
But the difference with China is that the government actually wants people to invest in stocks, which would mean that at some point there should be a rotation out of gold and into equities.
Yes, but they also have the biggest dollar cost averaging program throughout the Chinese banking system. So every paycheck, people are putting away and buying a gram of gold. Millions of people are doing this dollar cost program.
So you mentioned that you saw a seasonal rally here. We're seeing the safe haven buying, and you expect some kind of a sort of, not a sell-off, but sort of reverting back a little bit. Can you give me some price targets that you see in the short term?
Well, you know, gold can easily move as standard deviation 70% of the time is plus or minus $150. So we're almost up from as low as $150, and so that would easily say you could get a correction from it. But I think that gold is going to continue to do much better this year than last year.
Well, yeah, that was a pretty low bar, Frank, as we both know. In terms of, say, price sensitivity, we're right around $1,200 an ounce. Do you feel like there's some level where physical buyers kind of back off?
Probably within the next $50 would be a back off, unless some catastrophe happens around the world. But right now, I think that gold has had a wonderful move. It's doing what we've always advocated, having a 10% weighting and rebalance every year. It's really helped the other portfolios, which have declined. And gold stocks, you know, it's interesting, Alex, when you look in Australia last year and in Canada, some of these pure Canadian gold stocks and Australian gold stocks had magnificent moves last year, when defying that even though the price of gold had declined in dollar terms, these countries are seeing their cost of production, because oil's down, margin expansion, and paying locals in the local currency, they're making so much money. So you're seeing that there are some benefits over this decline in these other countries' currencies.
That's a great point. These investors that we're seeing right now, Frank, would you categorize them as sticky, meaning they're in for gold for the longer term, or will they be sort of turn around and dump if we do see a $150 move to the downside?
I think this last month has been predominantly hedge funds jumping in as a currency, but the smart buyers were last year buying in every down day. And I think that China continues to have this policy of getting up to be a global currency, and they're going to have 3% of their currency backed by gold. That means there's still a lot more buying. They bought 100% of all the world's supply last year came out of mines.
Right, and you mentioned, and that would really be what we're referring to as central bank buying. Barclays points out that China has really under-owned gold when it comes to their central bank reserves. What kind of pace of buying do you expect from them?
Well, if they maintain this level, they're basically buying all new mine supply, and mine supply is protracted to start contracting, and it peaked last year. So I think you're going to see a floor around $1,100 an ounce gold, and gold could easily be back to $1,500.
Wow, okay, so that's a lot of gold. So how much would that be that the PBOC would buy?
well, just think of almost 180 tons of consumption on a regular basis. What's also really interesting is Venezuela. Venezuela took all their gold was around 1900, and now they're being forced to supposedly 12 billion being sold, and it's being absorbed readily into this market. So that's a very positive statement for gold.